The other accounts are bad investments. To be honest, guys, very interesting. Their website is better than Apex. So I give them a... Welcome back, prop traders. My name is Forrest. I invest in stuff. My primary prop firm, and the one that I recommend everybody uses, is Apex Trader Funding. If you're new to trading or prop trading other people's money to trade. In this video, we're going to review Elite Trader Funding, and I will give you my final recommendation about them as a prop trading firm. There's going to be 4 primary components to this video: the evaluations, funded accounts, payouts, and then any of the promotions that they do. We know that Apex does sales, which makes them one of the most affordable prop trading firms. If you haven't seen my Apex Trader Funding review, go ahead and look that video up on my channel. It is one of my more recent videos. Anyways, let's not waste any time. Let's go ahead and get right into it. I'm gonna do a quick little mid-video commercial again, because I already recorded this. Sorry for the interruption. If you're new here, go ahead and hit that subscribe button. Love and appreciate you. Back to the video. So let's start with the type of account that I think is actually worth it and that everybody should work with, and that is the one-step evaluation. The one-step evaluation is just like the Apex Trader Funding accounts, right? These are the accounts that I use on a daily basis. They're accounts that most people use at Apex. The one-step account is really just the same thing, right? So there is a profit target and there is a trailing drawdown. Sound familiar? Yeah, that's because it is. So I want to break down all the different account sizes and then actually talk about something that's really important when it comes to prop trading, and that is the ratios. If you want to see all these accounts for yourself, you can just go to elitetraderfunding.com, come over to the evaluations tab, and it'll bring you to this page and you can see all of these. You can sort these by the type, right? So you can go to one step, you can see the end of day drawdown, fast track, static, diamond hands. We're gonna focus here on this fast track, but I've whipped up some notes and have them ready here so we don't have to stare at the screen. So the 10K has a profit target of 1,250, 25K is 1,500, 3,000, etc., etc., etc. So each of these has their own trailing drawdown, and this is really where you need to pay attention, guys. When it comes to these prop trading firms, the account size doesn't actually matter. What you're really buying is that trailing drawdown, right? So you need to look at the price per trailing drawdown, or in general, just pay more attention to the ratio between profit target and trailing drawdown. So the trailing drawdown for each one of these accounts, for the 10K is 1,000, 25K is 1,500, the 50K is 2,000, 75K is 2,500, 100K is 3,000, 150K is 5,000, 250K is 6,500, and the 300K is 7,500. So I went ahead and put these all in Excel. I know I went through those quickly, but I whipped up a table, did this on a flight earlier, and calculated all the ratios, because this is actually the important part of this video and actually relates to my recommendation overall. Everything else in this, is useful information, but for every single one of these account types, this is the type of work that you need to actually do. So it takes like 30 seconds as well. Just type up a table, it does the math. So essentially what we can see here, reviewing this table, is that some of these have a ratio of 1, and the worst ratio is actually the 300K at 0.375, right? So you want your ratio as close to 1 as possible or better, right? The higher the ratio, the more you can mess up relative to your profit target. So what do I mean by that? Let's look at the 25K. So for the 25K, you have a $1,500 profit target and your trailing is $1,500. That means that the goal that you're going for, you also have just as much wiggle room on the other side, which is really, really important. If you look at the 10K, profit target is $1,250, the trailing at $1,000. So your ratio is 0.8. The 300K on the other hand, you have a profit target of $20,000, but you only have $7,500 of trailing drawdown. So that's less than half of your profit target you have as trailing. If they gave you $20,000 of trailing, then it would be just as easy past the 300K as it would, say, the 25K. You would just scale up the number of contracts. Well, the problem is what most traders do is they try to get these bigger accounts, right? Because they want the leverage, but then they fail because they're not thinking about the ratio of the contract size, right? A trade is a trade, right? Whether you have a $500 trailing or a $7,500 trailing, a trade is a trade, and you're gonna get 5 points regardless. Now you might get 5 points with one contract, you might get 5 points with 2 minis, you might get 5 points with 35 contracts. But the trade is the trade. And so what you need to be cognizant of is really risk control. Now these accounts are designed, again, you have to remember the business that they're in, for you to fail. Obviously, they're gonna make money on the tail end from the really good traders long term, but most of their money is getting made from people failing. It is what it is. I have no qualms with the business, but don't be a sucker, right? Suckers get born every day. Try not to fall into that bucket, guys. So pay attention to the account ratios. It's the most important thing, even more important than the price. If you're a profitable trader, honestly, with the amount of money that you have to make to get any of these payouts, the cost per month doesn't even matter, right? The cost per month is a personal choice that you need to make really based off of, your current employment status and how much money that you have in the bank. But if you pass your account and you're patient and you get a payout, your payout's going to be a couple $1,000s, whatever it is, it's more than going to cover the cost, the monthly cost for any one of these accounts, especially if you scale up to 20. But let's move on. My recommendation. So basically looking at this table, the 25K is the best account. The 10K account is in close second. The 50K is in third, with the 75 and 150K tied for fourth. The other accounts are bad investments, not worth buying, and I don't really think that you should make money on them. Talked about the price, but in general, if you're willing to be patient, you could trade MES on, say, a 10K account, which I think is a great account for a newbie, right? Trade 5 MES, go for $250 a day, and you'll pass in just 4 days. And if you have 20 accounts, you're making, what, $5,000 a day. That's a lot of money, but a lot of you guys are gonna buy the 300K, fail, and never make a single dollar. So that's just the one step. But they also offer the end-of-day drawdown, fast track, static. Let's actually check this out. There's the end-of-day drawdown, fast track, static, diamond hands. And let's just read the description, right? The end-of-day drawdowns, they have a daily loss limit, end-of-day drawdown. So let's just look at the first one, for example. 25K account has a max drawdown of $1,500 and a daily loss limit of $550, right? I don't recommend this one. I think it's just more stuff to worry about. As a trader, you want as much non-current trade specific information as your brain as possible. The hardest thing about passing these evaluations is the fact that you have this trailing kind of these things in your brain that you're worried about around risk control to pass the account, and you're not just trading like you would a regular account. And we want to get as close to trading regularly as possible. We're doing prop trading. So we're not gonna spend a ton of time on this. End of day drawdown, I think, is a silly account type, and you shouldn't do it. Let's go to the fast track. Whew. Red Bull. If anybody at Red Bull watches my videos, sponsor me because I drink a lot of Red Bull. Let's talk about the fast tracks, right? It says confident in your skills and think you can hit your profit target quickly, pay less, and fast track yourself. The really important thing here is there's a maximum of 14 calendar days. Now this is calendar days. It's not trading days. So if you start on a Sunday, you have 2 Sundays from when you start to pass. That's essentially 10 trading days, right? Because the market's only open Monday through Friday, but it's not 10 trading days, it's 14 calendar days. So account for holidays and stuff when you sign up for this. To be honest, guys, if you're a new trader, there's no real benefit to the fast track accounts, right? These are always on sale. They are cheaper. They make them cheaper because you have to pass in a shorter amount of time. It's another element of pressure though. If you never pass, there's no benefit, right? It's kind of like buying something on sale that you never needed. You didn't save money, you just spent money and got suckered in by good marketing. Now, they're not a bad deal if you're an experienced trader. These are, I've tried these accounts out. They're fine. You can pass. Not bad to use on day-to-days like CPI and things like that, where you can essentially pass in one day with some strategies. But if you're going to approach prop trader and passing them in as standard way as possible, then I recommend just a one-step account and stay away from the fast track accounts. Again, it's another element of pressure that you just don't need. Now, the static accounts. Let's talk about these. Haven't talked about these too much in general. Didn't talk about them really in my Apex video, but I do think that there could be something useful about these, right? So let's read what it says. It says, these evaluations have a max loss and no trailing drawdown. The minimum allowed balance never moves from its starting point. Very interesting. So it sounds pretty close to just trading a regular account. Now, if you hit your max loss right out the gate, right, or trading high leverage like a silly person, then you're gonna blow up like you just would in any other account. But I never actually consider the statics. I think it's a good idea. It's the smallest amount of drawdown out of any of the accounts at $675, right? They only have, or actually $625 for the 100K and $1,250 for the 150K. So in terms of drawdown, it's pretty low. But if you have a good day on your first day trading the account, you have much more drawdown than you would in any of the other accounts, right? Because your drawdown window actually goes up. It doesn't really, but you just have a floor, right? Just think of it as a true $625 account that you're getting. And once you lose that money, you blow the account up, right? That's actually the best way to think about it. So don't even think about this as a 100K account. Really, you're getting $625 that you have to turn into $2,625. And for the 150K, you're really getting $1,250 that you need to turn into $5,250. And I think when you think about it like that, realize one, it's not a lot of money and it should help you be more patient in general. It's totally possible, guys. I actually have taken Ninja accounts a few times, actually personal accounts from a small amount to like over 10,000 and then just reset them, take all the money out, throw it into another account. So it's entirely doable. Like it's 100% doable to take $600, turn it into 30 grand. I've literally done it. It's possible, but you have to be patient. You have to be willing to not trade, and we have to be willing to move on this video because that's not what we're talking about. We're talking about ETF. Right, let's talk about the last account, Diamond Hands. the Diamond Hands account. You can hold overnight and weekend, end of day trailing, drawdown, and a daily loss limit. The funded accounts also have an end of day drawdown. We'll talk about the funded accounts in general. So there's just the one account type here, right? Holding overnight and weekends is nice, right? This is really just across the settlement periods, has a max drawdown of $3,500. Not really worth it. You know, being able to hold overnight or across settlement isn't really worth it, right? Futures always gap in the market, and there's no real benefit to playing that gap, in my opinion, right? If you want to play the gap, you can just play the gap closure. Most of the time, I really don't think it's a viable strategy. So there's no real benefit to this. There's more limitations. It's more of a headache. It is nice that there is no trailing, but again, I think the static is a better deal in this case. All right, so you finally pass the account. What happens next? So for all of these accounts, the trailing is the same until you hit the profit target, right? So you need to check each account type to actually understand the nuance there. But once you pass the account, you get sent a contract, very similar to Apex, right? You fill out the form, you get a new account that gets provisioned to you, same login, whatever, you log in and you could trade that account. You could trade 20 accounts, just like with Apex, you could trade only 20 accounts. And the important thing is that you cannot trade Apex and ETF accounts under the same Ninja license login. They're really rhythmic, right? They both use rhythmic on underlying. So if you want to trade 20 Apex and 20 ETF, you have to have 2 instances of Ninja running. You do that on 2 separate computers, or you can run it in a VM, which is what I do. Totally possible. At the end of the day, that's an insane amount of leverage. 20 accounts, another huge benefit. There are other firms like TopStep, which I do a review of next, only doing 3 accounts. This is by far, you know, between Apex and ETF, you could have 40 accounts. Even if you're using like the 10K, which is only 1 contract, having 40 contracts is an insane amount of leverage that you're just not going to get when you don't have millions upon millions of dollars, because that's really what you would need to actually trade 40 contracts on a daily basis without being absolutely out of your freaking mind. So let's talk about getting paid. I'm actually just going to go to their page and read it pretty directly here because I don't want to mess this part up. Don't want to be funny with the money. So let's just go ahead and take a look at the payments. So we're going to read it directly from here. I have it listed here in my notes, but we're going to read it here from here. It says, their goal is to build long-term relationships. For the first payout, to be eligible for your first payout cycle, you must have traded a minimum of 15 individual trading days and have earned realized profits equal to drawdown plus 100. This is literally exactly like Apex, guys, right? So your trailing stops. It also stops there once you hit your profit target, again, plus $100. Right? Or really drawdown plus 100, not profit target. At realized profits equal to the drawdown plus 100. Let's clear that up a bit, go to an example, right? So the trailing drawdown on the 300K is $7,500. So once you get your account to $7,500, profit plus another 100, so that's $7,600, then you can do a payout. For the second payout cycle, you must have traded another 15 individual trading days after your first payout, that's 3 weeks. And then for your third payout cycle, you must have traded a minimum of 10 individual trading days since your previous payout. So this is one of my least favorite things about ETF. 15 trading days is 3 weeks at least. It's a really long amount of time per payout, right? And as compared to the 10 days for Apex. They do process their payments every day, which is nice. So as soon as whenever you hit the 15th day, you don't have to wait for the payout cycles. But that's a long time. It's a really long time. It's a huge investment of time, guys. All right, really, really long time. So more information on payouts. Once a payout is requested, the trader is not allowed to place any new trades until the payout is verified. That's also annoying. Another point down, in Apex, you can keep trading, right? They'll still process your payout. It takes them up to 24 hours. So if you initiate a payout and the market goes crazy in aftermarket or something and you want to take a trade, there's nothing you can do. So you might not be able to request a payout for all your accounts at the same time, just so that you don't have that risk of not being able to participate in the market. You might need to ping pong your payouts, which is really annoying. If the payout cycle requirements are not met, you're not be able to receive a payout, nothing crazy there. They cover all the fees. They reserve the rights to essentially pay out your funds and close your account, right? So if you have a bad relationship with them or something, they'll give you the money that they owe you, and then they'll just close your account out, basically. You receive 100% of the first $12,500 earned, and then 90% after that. Pretty typical profit split. $12,500 is nice, nothing crazy there. That's per user, not per account. So even with 20 accounts, after you get $12,500, they're doing the profit split. And then we have the 40% rule. Very similar to Apex's 30% rule, they have a 40% rule. Right, your best day trade profit must not exceed 40% of your total profit to request a payout. For more information, please learn more here. Tax information, typical, you're paid as an independent contractor. You have to fill out a W-9, blah, blah, blah. So nothing crazy there. Again, the big knock against them here is the amount of time it takes. You have to do 15 trading days, another 15 trading days, and then 10 trading days after that, right? You're really looking at 3 months just about trading before you can, just have a shortened payout cycle, which is really, really, really annoying. Promotions. So this is pretty key. So when we were actually reviewing the accounts earlier, I mentioned that cost wasn't the most important part in terms of account selection, which is true. That is very true. But cost is important in terms of prop trader company selection in general, right? One of the great things about Apex, and you can buy an account with Apex anytime, and if you do, you should use my code down below in this description. They have sales all the time, guys. They have 90% off sales. They have the sale that's going on right now, so if you use my code, and if you have an account that's $100 a month, 90% off, it becomes $10, right? You can get accounts at Apex for $14 a month, right? Which is insane, versus ETF, which doesn't have too many sales. They had a sale recently. They have sales here and there, so hopefully they compete more with Apex on the sales, which I'd like to see. So the payout period length and the fact that they're just more expensive puts them really in second place behind Apex. They're really easy to trade. They're very familiar, right? Trade them with, I use NinjaTrader, I have a trade copier, very similar, same stuff. It'll take you minutes to get started if you're using Apex, but if you're using Apex, unless you have 20 accounts with Apex, because you can't trade them both in the same instance, there's really no need to use ETF. Like, great company overall, no knock against them. It's just a pain in the ass to trade both. You literally have to have 2 different instances open. There is brokerage software, I'm pretty sure, like Sierra Charts perhaps, that can do this. I don't have Sierra Charts. I've had people in our Discord tell me that it is possible, but ultimately the fact that you can't trade them both, they're very, very similar, and that Apex is just cheaper, there's not really a situation in my mind where you should ever choose ETF over Apex trader funding, though they are a great option overall. Now, if there's a situation or a reason why you personally don't like Apex, you don't like something about their business, totally understand, that's fine. One of the cool things about being alive is that you can do whatever you want. And if they pay you and it works for you, or maybe you're already locked in, don't feel bad. You don't have to feel bad. If you have a great relationship with ETF and you're making money, then you absolutely should not change anything at all, guys. Important things I always tell people is that if it ain't broke, certainly don't let me try to fix it. So I give them a 4 out of 5. That is right, Elite Trader Funding gets a 4 out of 5 simply because the amount of time that you have to put in to get paid, and then the actual cost overall. Outside of that, they're a great company. I haven't heard anything negative about them at all, and I know a ton of prop traders, guys, absolute ton. And that's not true for other companies, which we'll get to. I have heard bad things and I've had bad experiences with other companies, which has not been the case with ETF. So if they shorten the amount of time that it takes to get paid and lower their costs or just have more sales overall, I would give them a 5 out of 5. Also, their website is better than Apex. Apex's website is terrible. ETF's website is not, but Apex is still better, and that just shows you how important priorities are, guys. Again, my name is Forrest. I invest in stuff. I think that everybody should too. Hope to see you in the next video, and certainly hope to see you in the Discord, and hopefully you don't see me on the other side of your trade collecting your money. Peace.